everyone. I hope you're ready for some secrets. Apparently, my panelists are about to spill some secrets up here about scaling, whatever that is. I don't know. Maybe I'll ask them. With me today, I have John Levine from MariMed, Seth Yakatan, and Alex Gray. Could you just take a minute and say which companies you're from?
Sure. I'm John Levine. I am the co-founder and CEO of MariMed, Inc. We're a multi-state operator presently in the states of Massachusetts, Illinois, Maryland, Delaware, Ohio, soon to be in Missouri. And we have brand products from our Betty's Eddies to Confusion to Bubby's Baked and Vibations. And we're excited to be here.
My name is Seth Yakatan. I'm an advisor and a small investor in the sector and have advised two major entities in California, including Ease and currently with Glasshouse.
I'm Alex Gray. I'm the co-founder and chief strategy officer of Good Day Farm. We are a vertical operator in Missouri, Arkansas, Louisiana, and Mississippi.
All right, thanks. Let's get going. So scaling is a concept that could refer to many different things. Could refer to operational scaling in terms of CapEx, spend, production, physical, plant growth. Could also refer to just flat out finance terms, efficiencies of scale, growing your gross margin without increasing, or growing your revenues without increasing your costs. Could also mean market penetration, revenues objectively, revenues by region, revenues by product, number of products. So any number of ways you could define the concept. And I'd like each of you to talk about what type of scaling your company is focusing on right now. And I know we all want to do everything well. We all want to focus on everything. But really, where is management's focus right now?
Well, MariMed, our focus is to continue our strategic plan of expanding in each of the states that we're in until we're fully vertical in each of those states, maxing out the number of licenses in each of them, and moving into restricted states like Ohio with the adult use coming online, focusing on mergers and acquisitions. But right now it's about getting our existing business up and running, and we're opening up several new facilities in 2024, and we hope to have those up and running. But the biggest challenge of scaling is being able to get cash, raise money, or to increase your stock value. And this is a very difficult time on the public market to raise money, but we've been very fortunate that we have a great partner in our newest lender with Needham Bank, who just did a $52 million, almost $60 million with us when we finish our construction. And they're willing to do additional monies on top of that. And hopefully when the market changes and the stock price goes up, that we're able to raise additional monies to help us continue the growth in mergers and acquisitions.
Okay, so dollars, scaling, a pretty traditional definition of scaling.
Yes, we've been very successful in that we've got, I think it's 13 quarters of increased revenue and cash flow positive. So we're very excited of the continued growth.
Seth, maybe your answer will be a little bit different because
First of all, John, kudos to you and your team, because that Needham Bank deal was at a rate that my eyes fell out of my head when I saw. So whoever's doing those deals for you, you should incent them to do more. I think when you talk about scale, to me, it changed in the last 4 or 5 years in the industry. And for me, scale is figuring out the one or two things as a company that you do really well, that generates cash flow for you, and growing that. I think the mistake that you've seen in cannabis is people have tried to do 7 or 8 things at the same time and grow at a massive scale. And that really hasn't worked. So for me, when you talk about what the secret to scaling your cannabis business is, it's again finding the one or two things that you do really good, that you make a lot of money at, and figuring out how to do more of it. And that's what I think.
And I'm going to come back to that question of how has it potentially changed in the view of investors over the past few years. Alex?
So we're a relatively new company. We were founded in late 2020 and became operational in 2021. So, we've kind of been drinking from a fire hydrant. We now have, I think, 52 operating dispensaries in 4 states. So the scaling has certainly come at a fast pace for us. As a business, though, I think we're really focused on scaling our earnings, and that really is looking at every aspect of the business, figuring out how to be more efficient, how to cut costs. We say chips make chunks, and so it's looking at discount percentages at retail. It's looking at KPIs in the garden, really optimization of your biomass, and so really trying to view this thing as just we're running a business at the end of the day. We happen to be selling cannabis. But we're a business first and foremost, and so that's really kind of our focus is just really working on scaling the earnings.
So John, would you say that maybe your MariMed and Good Day Farms potentially are going about scaling a little bit differently? How do you guys see what you're doing as similar or different in your respective markets?
I think that we're pretty similar. I mean, Good Day Farms has been growing rapidly in a very short period of time, expanding in the markets that they're in. They do a very good job with what they do. It was like Seth was just saying about concentrating on what you're strongest at. We're really working on expanding our branded products into as many states as possible. Our Bubbies and Betty's Eddies are top in the states that we're presently in and that we're licensing in, and those products are going to really be the future of expansion and growth. Branded products are really going to be a big piece of our business in the future, and it's going to be a big concentration that we have to do now. The market's going to continue to change. We're the only industry where you have to manufacture everything from the beginning to the end, so you have all aspects of the business. Nowhere else in any other industry will you see that. Very interesting time.
What Seth and Alex, what do you guys think about the brand strategy?
I think that the most successful brands that we see kind of, third party, what people think about as brands are the ones that are really kind of the owner operators. It's tough for a brand to translate from state to state because of the, intrastate nature of our business. And so, but that's not to say you can't do it. But I think the ones that we've seen that are our most successful, the ones that, their product moves the best in our stores are really the operators. At the end of the day, those seem to be the winners in the kind of the brand sector.
So to go back and answer your first question, I think in MariMed and Good Day Farm, you have 2 very good examples of vertically integrated multiple state operators that are doing cultivation, retail, and brand, and doing it pretty well. For my money, the real action for me is in what you would traditionally define as lower middle market companies. And those are brands. And I've articulated often that there are 5 or 6 models that I think function. And I think one of the most powerful brand is either, or one of the most powerful, kind of models is either brand plus cultivation, which you see operating functionally on a private basis in many states between 10 and 75 or 80 million in revenue, and the inverse asset light model that allows you to go multi-state. And I've articulated 2 companies in Timeless and Gruen Edibles ad nauseum that I think are 2 of the best exemplars of that model. And for me, I think I look at everything from a capital markets perspective. Like I say, I don't go to the bathroom without a strategy. And my strategy in cannabis is that those lower middle market private operators in the brand space that are generating in revenue and cash flow are going to become the most important as you go forward, because they're either going to be the companies that, if legalization comes, are going to be acquired by companies like this, or are going to be used as platforms to roll other things up. And fundamentally, cash flow is just going to win.
Yeah, let's talk about this. One thing I've learned during the time I've worked in cannabis, which is going on about 5 years now, almost full time, doing tax work, accounting work for cannabis companies. I've seen a lot of M&A. And one thing I've learned is that nobody in this industry agrees on much. So the capital asset light model, I've heard people swear this is the future, this is the only way you can make it. And obviously, Good Day Farms and MaryMed, you have a pretty capital intensive vertical model. And Seth, I heard you saying maybe something in between, that the capital light model is needed and will be attractive to the verticals.
I think if you look at the, asset light inverse license model that, these two companies exemplify, if you're selling an edibles or a vape product and you go and you MSA a facility and you put sales support in there and you know how to sell to MSOs in states that kind of function the same and there's a limited number of players there, you can be a pretty profitable company and gain market share and get into 8-9 states. I don't think that's the only model that functions, but if I've going to articulate, 12 companies that have done that pretty successfully, well, I'm not that smart, but there's a theme, right? Are all of those going to then need to be acquired? No, but I mean, if you're a $50 to $100 million revenue business that's doing 20 to 30% EBITDA in any other industry but this weird industry, that's an acquisition candidate, right? So, I mean, I'm not that smart, but I think cash flow is ultimately going to win, and that's a model that generates cash flow.
Well, we've been very successful on generating positive cash flow. We're going to continue to use our model, but you're correct. It's very difficult. I think, Alex, you just said that. It's difficult to have that consistency of your product lines as you go from state to state. We have been very careful to make sure that our processes and procedures are followed so that we're able to give that same quality in every state that we're in. So when a person goes in to buy a Betty's Eddies, doesn't matter what state you're in, you're going to get that same quality, flavor, taste, and exemplary mood or help that you're looking for consistently. And that's the biggest thing with this industry, is that he's talking about having capital and cash flow. You have to be setting these up at a way that you can control the expenses and not have to put a lot of CapEx dollars in as you grow the business. That's why I still feel that the brands are really going to help us spread from state to state, whether we're doing it through licensing or we're buying our own processing and concentrating on what we are best at.
Yeah, I mean, this is a tough industry, and cultivation is tough. We sell a lot of flower, kind of as an enterprise, and so we strive to be consistently consistent in a consistently inconsistent business, and that's not easy. But so our strategy it's unique. I mean, we're very fortunate. We have capital. We don't really have any debt. And so it allows us to kind of have the scale, have the retail footprint where we're not relying on kind of third parties to buy our product. We can run our product through our stores. We still want to sell as much as we can to the third party, to the market, because we want our stores to be able to buy as much third party product as possible and have that, great assortment. But I would just say that whether it's the asset light approach or our approach or John's approach, there's a lot of different approaches that can work in the industry. I think it really all goes back to it's just good business practices. You just need to try to make more than you spend, and at the end of the day, that needs to be the goal, and that's how you can be successful regardless of what approach you end up taking.
I think there, I've identified 6 different approaches that all function, and when I say function, generate net operating income before interest and taxes. So there's not just one model, there's several models.
So no right answer.
No
You heard
right
it here
answer.
first, there is no right answer. So aren't you glad you came to spend your time here? So Alex, going back to your point, talking about it's just good business practices. You just have to run a good business. I hear that, I see that, I can see that it's true, but what is it, any of you can answer this, about this industry or some things about this industry that make that more challenging in different ways than in other industries?
I would say that because it's such a new industry and a lot of operators in the industry maybe came from different backgrounds, other than maybe manufacturing or retail. So there's a lot of just people with different experiences that aren't really, from those backgrounds. So I think what it leads to is you tend to have, supply demand seems to be out of whack in most states. You tend to have price compression. People tend to get a little desperate, and so all of that leads to just a falling knife in a lot of states. And so I think you have to set up your business by not being too optimistic, by being a little maybe conservative and pessimistic in terms of what you think the average price per pound is going to be in 12 months. I've seen a lot of decks where it was going to be a lot more expensive than it actually ended up being. And so I think some of the optimism that is natural in this industry, which is why I think everybody's probably here, is also kind of hurts the industry a little bit. So I think you just have to be conservative when you're starting out in terms of where the price is, expect some price compression, and then figure out, hey, does my model work with the price compression that ultimately is going to happen?
Yeah, Seth, you've never seen that, have you? Over
No,
optimistic.
but I think that's a great answer, but I would answer that question in an entirely different fashion, which is that each cannabis market functions as its own individual nation state market. And everything that they teach you in business school about economies of scale and, hub and spoke distribution and maximization of shareholder value, you can't make those decisions, because what you're going to do in Massachusetts, you can't necessarily do in Missouri, and a product that you would normally just, probably find the lowest cost of manufacturing and ship around the United States, you can't. So I think the nature of the industry is that every single market you have to build your infrastructure to the rules, and you have to spend capital in that specific market, and you get no efficiency.
So hard to scale when this industry is hyper-local.
It's impossible.
John, care to disagree with that?
No, you have to be hypersensitive to the local markets. I've been in cannabis since 2008, and the fact that what I've seen for changes from state to state is amazing. But one of the biggest issues is when you're trying to make a manufactured product, you can't even use the same packaging in every state because of the restrictions within the states. That's a bigger expense. So this industry is very hindered by having to be local to the market that they're in. You have to manufacture from the ground up, or you can just have to change your product variants based upon what the state regulations are to adhere to each of the rules. This is a very different industry that you won't see in any other market.
Now, to that point, you also have two operators who have done a great job in finding ways to be efficient with those constraints and generate cash flow and figure it out. So when we talk about scale, it's also figuring out how to work within those constraints, right?
Well, it's like Alex said, you have to understand your operating expenses and make sure that you're keeping the margins that you're looking for to keep you profitable. We are one of the lucky cannabis companies with positive cash flow, positive earnings, and a very strong balance sheet. And that's for a reason that we have been very cautious, not rushed into every market, and taking our time to grow in a real sense of how a company should. A lot of other companies raised a lot of money, got a lot of debt, went out and bought to be bigger, quicker. But we've always been more conservative in that we want to make sure that we're having the highest quality product put out, whether it's our branded edibles or our top-line flower, to even our open flower, that we have to make sure the costs and everything are maintained and controlled, but that we adhere to every state policy in every state, and they're all different. So it's a lot of discipline in understanding how you have to run each of those markets different.
And when you're scaling, in whatever definition of scaling you're using, what do you really have to keep your eye on? Which ball do you have to keep your eye on while you're making your big plans? Especially in this industry, what are a couple things that either in your past or your company's past, now you don't have to exactly say, maybe you've lost sight of and had to readjust, or other things you see in the market where bigger causes a company to lose sight of something that's really central to actually scaling?
I would say the single most important factor that often gets overlooked, and what it makes this industry so difficult is that, in a typical industry, the law is not constantly changing on the state level, at the regulatory level, and the federal level. And so you really have to keep, your thumb on the pulse of the politics. And, that takes a lot of boots on the ground. It takes a lot of relationships. And so, we're based in Little Rock, Arkansas, and nobody here probably knows where that is, but it's a 3-hour drive to each one of our states, and so we make sure that we have local partners that have relationships, and again, the whole political side is so important. Talking to your local mayor, your city council, your state representative, the governor's office, and then your local, elected house, people in Congress. It's those relationships are important, and I think that it makes our entire industry just very challenging from that standpoint.
I think the single biggest thing that I've seen is that people make capital allocation decisions on the expectation of future demand and not to actual demand. So you saw in Canada and in the US in cultivation and in the US in retail and in the US in manufacturing, hundreds of millions of dollars that were spent to facilities that were built with the Field of Dreams, build it and they will come. The one that comes to mind to me, and not to disparage them, but if anyone was ever in the forefront manufacturing facility in California, it's the single biggest manufacturing facility I think I've ever seen in my life, and it's now closed. So, just building and making capital allocation decisions to actual demand, as opposed to we're going to hope that we get this size of the market and fill this, is probably the one thing that I say.
Yeah, I think you have to look at it as running a regular business. I think people are out there and people are jacking up prices for cannabis because you have all these limitations of who will do work with you. And if you don't know what you're doing, you're going to overpay or over-design a facility. And I think a lot of people have put in too much money into their facilities. But you also have to watch the operating expenses. It's very important that you be able to grow your flower and process your flower for the right number, where you're never going to make money, especially if you're in Michigan where the prices keep going down and your margins are very, very tight. You have to be manufacturing with the right cost, watching your overhead, watching your staffing. We went from, I think it was 12 employees in 2015 to over 800 today. And we're growing rapidly, but it's a eye on the bottom line, making sure that we're spending the proper money and not overspending where we don't have to. Not building a facility that's bigger than we'll be using for the next 6 months.
So I'm hearing accounting is important. Inventory costing, perhaps, is important. How about closing your inventory? That's important, I would say. So fundamentals, business fundamentals. Let's see. What was I going to say? So Seth, you were talking about, or you mentioned earlier, that you think the way investors look at scaling has changed in the past 4 or 5 or even more years. What kind of stages have you seen in terms of how investors value companies, what kind of scaling is valued, what kind of measurements are valued?
Well, on the public side, it's easy because you have a number that you could look up every day to kind of come up with some level of relative value, right? Whether that's true or not, I'm not sure. I would imagine that you think your company's undervalued.
100%.
So that's the right question. That's the right answer. That's the right answer. If you're a CEO and you don't think your company is undervalued, you're the wrong CEO. So, but seriously, I think you've seen waves, right? So public equity came out in a wave. It infused a couple of $1 billion of capital in the market. About $2 billion of private equity has been used. I don't know of too many funds that have a lot of dry powder left. I could probably fit them in $100 to $200 million bucket, and it's kind of left you with debt capital. And I think that's really where you're at from an industry perspective. And I think debt capital is highly selective and it's highly expensive and it's real estate and cash flow backed. And if you have an asset that's in that area, you're probably going to be able to raise money. On the equity side, in the last 4 quarters, every single transaction that I've seen for a lower middle market private has been a convertible subordinated debenture at a discount to market at somewhere between a 1.7 to 3.2 times forward revenue valuation multiple.
So revenue is
Seems
still,
to be the
still
metric.
there.
So
Okay,
that's kind
important.
of how I look at the world. But
What kind of measurements do you think investors are looking at, John? What are you looking at?
Well, we sit here and we look at our balance sheet and our income statement constantly. Unfortunately, our shareholders are very upset with where the value of our stock is today. Being the largest shareholder, I am also upset that, to your point, we're hitting the revenue, we're hitting the cash flow, we're positive in all of them, but yet our stock is way undervalued. And it's very difficult to understand. And it's mostly because you don't have large bankers able to get in and buy shares of stock today because of the restrictions. And I think that some of the day traders are just a little confused over what we're really about. And we're trying to send the positive message that our growth is going to continue and we're going to be here, we're going to generate larger earnings and we're going to hit the bottom line. And that will help our stock eventually get back where it should be. We're just undervalued today because I think the whole market is actually down.
So perhaps not an entirely rational market in the case of cannabis stocks,
No.
for more than one reason.
I think it's a totally irrational market in terms of cannabis valuation. I don't know how, there's no technical fundamentals that guide why shares trade up or down, and you're basically in a micro cap kind of trading environment. So I think it's totally irrational, honestly.
Alex, what are you looking at? What kind of numbers? What kind of ratios? How are you measuring things now? Has that changed since you started the company?
Well, we're private, so we're not worth anything, I guess, on the stock
Right.
market. But
Not officially.
I think, we look at bottom line and we look at how much money we're sending back to our investors. That's what matters to our investors, and that's how we've been able to raise capital. It's about making money and making distributions, and so that's what we do.
Any advice? What kind of advice would you give to, we're supposed to be telling secrets, so I think people who are in attendance might want to hear a little advice, some secrets, help save them some time so they don't have to go around the block the long way.
Find the one thing that you do in your company that makes you the most money and do it again. Find the one thing that you do in your company that makes you the most money and do it again. It's real simple.
Yeah.
Yeah. I'd say just don't wait for the storm to pass, just learn to dance in the rain. And it's tough out there now, but we got to figure out how to, you got to tighten it up, learn to make ends meet, and then, I think rescheduling happens, it'll be a big boost, and there's positive things that are going to happen in this industry. It has to happen, and that ball's already in play, and so I would say that would be my advice.
Mine would be, if you don't really have the stamina to deal with all the changes that come in the cannabis, this is a very difficult industry. You got to be patient, you got to be smart, you have to run it like a real business. This isn't just open up a shop and people will come. There's real management and responsibilities behind this industry that people really don't understand. It takes a lot of capital, but you have to put the time and effort in, and it will all be a reward.
There you go. Anything else? Don't do this. We said don't overbuild. What else should be on the don't do list?
Don't try to grow too fast.
We tried to grow too fast.
I don't think you need any more massive cultivation. If anyone's building a massive cultivation facility, please see me. I'll save you $25 million. We could deploy it somewhere else.
at least.
There's a couple of pretty big cultivation facilities already. No more massive cultivation.
I think we are almost exactly out of time. Thank you,
Thank you.
panelists.
Thank you.